Assalamu alaikum warahmatullahi wabarakatuh. Good evening, good morning, good evening, good afternoon, wherever you are in the world. I hope you're doing well, and I hope you have catching peeps as usual. Maybe this week is actually something that is just happened to me, which is I am just going to share with you guys so that I just made some mistakes today with the price action because I can't actually explain what is just happened to me without me sharing what is just going on with the price action. So yes, like as I'm shows you yesterday from the beginning of this week. Today is Friday, which is 19th of January 2024. So since from the no Friday or from the Monday 15th of January to the this week 15th of January, if you will look at timing section, which is down below here, you see where my cursor is at Monday January 2024. So at that time I have my analysis, which is going to show you that is I just stuck on my analysis that I just do on price action. I just stuck on my price on my analysis, not just actually look at the opposite what is the opposite side of the market is going to do if my analysis goes wrong. I just stuck on my analysis, which is the bad idea. So I just learned the lesson. Of course, you can't even actually learn anything from the market unless you please you started to be present with the price action. So I learned a lot today. I'm not gonna lie to you. So I'm actually looking for a short position on dollar index. This is the 4 hour time frame. You see, this is the 4 hour time frame dollar index. Yes, this is the 4 hour time frame on dollar index here. So don't get it twisted too. I've continually been asking me what the what the actual pair is this, so which is dollar index. So I'm actually every single day, every single time, if I come into chat, if I come in to started to analyze the chart, I just started my day with dollar index. I just like to see where the dollar index is heading, so that I can so that it will go on to make sense for me to look for a short position, to look for the actual trend that I like to take from the dollar index to do the opposite on GBP USD or Euro USD. I mainly trade those pairs, so I'm not actually looking at others. So I'm not going to zoom out on the daily time frame, but to actually going to draw my the daily time frame is bearish, and the 4 hour time frame is actually still bearish. Yes, of course it's still bearish, but yes, we see this is the daily leg pullback into this extreme supply when we took out this low on a daily time frame. So whenever we see the daily time frame market structure broke, which is here, whenever we see the market structure broke, which is here, which is a daily time frame, from this low to this high is a daily time frame. So whenever we see the market broken previous week low, we expected to see the market actually mitigate the extreme supply or 50% of the leg before we look to take a short position from. So that is exactly what is happening. If I draw my Fibonacci zone from daily time frame to daily time frame leg, this is a daily time frame leg from here. Let me actually use this full peak traffic. Yes, so this is actually a daily time frame, and this is the 4 hour time frame. This is how the daily time frame actually looks. Yes, this is actually how the daily time frame looks. But if we look at the 4 hour time frame, we see the market actually trending within the daily time frame structure, which is actually which is obviously what is going to happen. In order for a daily time frame to make a trend, we have to see the market structure being built on a 4H time frame. In order for the 4H time frame structure to be built, we have to see the M15 time frame making series of lower highs, lower lows. So that is exactly so I'm expecting this daily FVG. This was a daily FVG that I actually just mark out. So this daily FVG actually is at the premium pricing, so we must mitigate the premium pricing of the leg of the daily time frame after we see the mitigation of the daily time frame leg, which is this FVG. After this FVG, we see the market actually tell to make a new high, then broken this low. So this is actually going to be act as a flip zone reaction. And before the market broke on this daily low, which is actually realigned with the 4H low, we see the markets left huge imbalance, which is the area that we like to see the market actually attack before we continue making series of lower highs, lower low. So for me, when I see the market actually making series of lower higher highs, higher lows, then we see the market broke on this low on the 4H time frame, and then we see the market actually just been build up liquidity and just sweep it here and mitigate the extreme supply of this leg that caused this low broken. I just told myself that on Monday we are going to go down because of why the market manipulation this high, broken this low, and then the market build up liquidity, bunch of liquidity, then to sweep it here, market sweep liquidity that was resting above here, that was resting above here, that was resting above here, and then we started to see after, as long as we see in the market making M15 time frame this liquidation grab, as long as we see in the mitigation of this week 4H time frame, I'm going to look for short formation on Monday, and that is exactly what I'm looking at on dollar index, to look for short formation. So surprise, the markets did me dirty. So we learn lesson by doing mistakes. So I made mistakes, I learned a lesson, I learned a lot, I journaled everything. So this week I'm actually down for like 1% of my initial capital. I trade just Monday, Tuesday. For the rest of the days, 3 days, I actually been busy with something, so I'm not taking any trade. I'm not waking up early to actually trade those times. So that is why I trade Monday, Tuesday, Wednesday, Thursday, Friday. I didn't trade. I trade Monday, Tuesday. Yeah. So if I'm scaling down to the lower time frame, I'm going to show you something. So in order for $1 index, like I'm told you, or like I explained the reason why I took this short position on dollar index, I'm showing you the reason why I took the short position on dollar index. I'm shorting dollar index, which is me going to buy on GBP USD. Yes, exactly. So I'm mainly focused on those two pairs, GBP USD, Euro USD. That is exactly what I've been doing for the past 2 years back. So one thing I am actually forget to tells myself is the market is actually going to attack the liquidity from internal range liquidity to external range liquidity, from external range liquidity to internal range liquidity. When the market actually attack the external range liquidity, so we expected to see the market came into the internal range liquidity. What is actually being built inside of the internal range liquidity? Internal range liquidity is going to be the imbalance, and it's going to be the order block whatever, or break block whatever. So after the market mitigate the internal range liquidity, what do we expect the market is going to do next? It's attack the external range liquidity. So where is the external, where what actually been what is actually been rested at the external range liquidity, which is common to be the session highs and lows, previous daily highs and lows, previous weekly highs and lows, bunch of liquidity. So that is exactly, as long as you know this concept, everything is started to make sense for you to actually continue to smash the market. So I'm actually forget to this was going to be the 4H external range liquidity, yes, which is going to be the previous actually maybe sessions highs or those Friday highs, yes, Fridays or 5 of January, Friday's high. This is external range liquidity. I'm forgetting we are still in a premium pricing of the daily time frame. So the market maybe can go up into this extreme, or maybe the market can go into this extreme supply of like to actually mitigate the extreme. Maybe the market can sweep this high, maybe, and then continue to move to the downside. That is exactly what the market does every time. So I'm just stick with this bearishness that I see. So which is unconfirmed trend, because of why the market actually broke this. Maybe this could actually be as a Judas swing, which is ICT called the Judas swing, and the market continue to move. Maybe that you see the market making series of higher highs, higher lows, higher highs, higher lows. Then we see the market broken this low like this, and the market continue making to continue to move higher highs and higher lows. So I'm actually make mistakes by just of do one and one makes mistakes by just sticking with my actual analysis, not observe the bias. as I'm shade as I'm do as I do my what I'm going to say do my plan. Yeah, I'll do my plan after after I have done everything. I'm going to observe the bias, the boss bias, which is buy side and sell side. I'm going to observe. So at that time, at that day, which is Monday, I'm not actually observe the both bias. I'm just observe one bias, which is short position on dollar index. So and the market actually continue to broke this high, which is the market actually need to attack the extreme leg, because from this high to this low, that was the daily time frame structure, daily time frame trading range. Makes sense? Yes, that was the daily time frame trading range. So after market broke, mitigate this FVG, I'm making broken this low and continue to move the upside. And it's not going to say the market is going to actually continue to plute till all the way till we broke this high. Now maybe the market generating more liquidities from here to sweep it and then continue to mitigate the extreme supply of the daily leg. And on the 4-hour time frame, we still bearishness. So I'm actually going to look for short position for the next week, last week of December. Today is yes, of course, today is 19th of January. And last week of January, I'm going to look for short position on dollar index. As long as we see in this low broke, I'm actually going to continue short position from here. And that was my buy. So let me show you the entry that I took on GBP that I messed up on Monday. So I'm looking to a short position on GBP on dollar index. So that means I'm going to look for long on GBP. So you can see to the Friday, yes. So as you can see from here, where I place this vertical line, which is the beginning of this week, which is 15th of January 2024. Oh, that is exactly. So as you can see, the market actually sustained almost 36 days in this stock in this range, which is actually something different that we have been seeing in the market. So market, the structural market of the 4 hour time frame is bullish, which is mean I'm going to look for them, because from here to here we broke this structure, and then we fall back into the at least 50% of this leg. After that, we broken this structure again. From here we broken this structure, so that means this is going to be my trading range from here to here. So that means this is going to be my trading range. So I mark out this extreme demand, and then we see the mitigation of this extreme demand, and then we see the market making series of lower highs, lower low, higher highs, higher lows, higher highs, higher lows. That means I'm going to continually making series of long formation. And then the market actually surprised me to reverse. Why the market will reverse? Because the market actually generating trendline liquidity, bunch of liquidity that the market actually been generating. This low, this low, and this low. And then the market, I'm looking for long from this demand on the Monday price action here. I'm looking for long because I'm actually continue to go with the current order flow, and then we need to get the continue to the current order flow to target this actual buy side liquidity, the actual this buy side liquidity, which is yeah. So then the market reverses, and that is why the market reverses on GBP USD, and then the market continually to mitigate the extreme demand on a daily time frame, or extreme supply on a daily time frame on dollar index. That is exactly. So let me walk you through from to see. So on a N15 time frame, which is going to be my area that I like to see the market swept before I look to take a short long position. So after I see the market swept this Friday's low, and I see the M5 time frame confirmation entry, which is going to be this area, I look for long position, but they didn't work out, just took me out here, and this is the break-even trade. So this is the first loss. This is the first loss I took on GBP USD on Monday. I took because we see the manipulation of this low, and we see the break of market structure, internal structure to the upside, and then we came back to mitigate this demand, and then we look for long, and then the market surprised me, took me out. Because of why? Because of this previous daily low, and the market gravitated this sell side liquidity, and we see the M15 M5 time frame confirmation. I took the entry maybe around this time here. I took this entry. The market actually playing around here. I just close out the trade on Monday, and so on Tuesday price action, which is the extreme demand on the leg of the 4H time frame. I didn't see any confirmation entry, so no trade for me on this day. So that means I'm up. So I don't also, so let me tell you something. I don't actually trade New York session, so I'm up to the to my working place. That is why I actually didn't trade New York session most of the time. So that is why. So exactly. I just actually show up 2 times this week. Shows up 2 times this week is going to be something else. So it is what it is. So that is what is going on. Oh my gosh, actually really pocket tight. So with that being said, I'll see you guys on the next one. Peace out.